What's up, y'all? How we doing today? Welcome to the first video on the page. I'm sorry if I'm being too quiet. It's a little early. And I got family inside the house, so I'm trying to be as quiet as possible. For those who are familiar with trading, stick around. Obviously, for those who are not, stick around as well. Now, I have a chart. Now, when it comes to looking for the best contracts to trade, what I do is I go to bar chart, select commodity, and I'll go all the way to S&P 500 E-mini. Open interest. You're not looking at the cash. You're going to look at the contracts, which is for September. To break things down and make it a bit more simple, ESU, the U is for September. The contracts expire in September and it rolls off into December, which is going to be ESZ. U is for September, Z is for December, H is for March, and M is for June. 4 contracts in a year. We're in the September contracts for ESU 2025. The open interest of this is 1,919,725. That's going to be for the S&P 500. If I go to NASDAQ, the open interest of that is going to be significantly lower. So there's less volume attached to this market. If I go to Dow futures, there's even less. It's going to be that way regardless. There is 30 stocks attached to the Dow Mini. So a lot of times it's not going to be a lot of volume in Dow Jones. NASDAQ is the next thing up, 100 stocks inside that commodity. Then you have S&P 500, which has 500 stocks. So off the bat, S&P 500 is going to be more volatile, okay? The more things to trade in those markets, so it's going to off the rip be more volatile. But I find, when it comes to markets, I find Dow Jones to be my favorite. Now, it's not to say that they move slow, because they all move correlated, damn near. That means if NASDAQ is going into buy positions, it could be a day where Dow Jones may be going the opposite, or they can move together. It all just depends. I have a marking on this chart. This is what it looks like. I started with the weekly range. My attention was primarily drawn. A lot of you aren't going to understand what terms I mean when I say some of this stuff. I'm not going to cover what all this stuff means quite now off the rip. That's going to be for another video. I trade ICT concepts. Some people trade SMT. Some people trade support and resistance. I'm more of an ICT person myself because it makes more sense to me. I think that support and resistance does not offer me enough information to be able to take a trade, but there are support and resistance traders, and I don't judge them at all whatsoever. My first thing was looking into where the market had previously traded into, which is going to be as far as the previous high, the largest significant high. And if I look to the left, I can see this fair value gap. Fair value gap basically is just a 3-candle pattern where the wicks don't touch. There's no wicks that touch each other, so it leaves out an imbalance. The market typically likes to balance out. We filled it 100%, came back down. So right now we're trading outside of that range. I'm looking to take positions, so don't ask me to see my account. Don't ask me for any of that. I do have a separate screen where I take my trades on my original account, but for the sake of this, I'll be taking my positions on the demo of TradingView. After we tapped into this fair value gap here, came back out of that range, and then we came into this fair value gap here. So this imbalance, this large imbalance, we came into that. Once we came out of this range, we caused this gap right here. So this gap that we see right here is known as a volume imbalance. The market has to come down and balance this out. Typically this happens from a new week section. Since the markets are closed on the weekend, the market opens back up on Monday. So when it opens up at a different price a lot of times. That's what you see here, this volume imbalance. It opened up at a different price, in which we got to come back and balance that out. So we're looking at that on Tuesday today. So we tap down into this volume imbalance. This would have been a perfect buy right here on a Tuesday. We could expect to at least go up to I'd say this high right here, coming back into the mid-range of this fair value gap, and I'll show you what that looks like. We're close to that 0.5 level, the mid-range of that fair value gap. Not quite there, but we're close to it. So I'll be looking to possibly get some positions up to that midpoint. So I want to drop down to a 15-minute. Yep, as you can see, we're buying out. Drop to a 5-minute. Drop down to a... Yep, so we've already got that. We've broken out this. We tapped into that range here. This will be support and resistance that people look at. I'm going to look for the market to retest into this. Paper trading. We broke out of this weekly. We looking to go up to these highs. This is relatively equal highs. The market don't just leave this. So if the market just intends on going back down significantly, it's got to take that high out first. We have a couple of imbalances that have been left open like this one. So this will be a place to take profit. This is going to be very aggressive because we tapped into a significant level on the weekly time frame. I'm interested in looking at this high or the midpoint of this high as well. I'll show you. Right there. So I told y'all I'll be interested in buys. Beautiful thing, you know? That would have been a beautiful position. That would have been a great position. Should have looked at some news first, because I'm pretty sure that there's some news out right now. In market conditions like this, so there's 8:30 news out. Already passed. 10 o'clock news is coming pretty soon. What time is it? 9:53, yeah. Look at that. Look at that. Look at that. That's beautiful. That's gorgeous. In market conditions like this, which I believe we're going to come back down and retest. We're going to come back down and retest this volume imbalance that I was talking about on the weekly time frame. This is a pretty big trade, okay? So you could have easily entered in on the lower time frame, and you'd be making over 137 points in less than 20 minutes. In less than 20 minutes, y'all. There's people making hundreds of thousands of dollars right now as we speak. You know, for beginner traders, I'm gonna tell you one thing that I used to do when I first started trading. When I would see stuff like this, big rally run, there is a major difference between a gambler and a person who is skilled. Okay, so gamblers, they would take positions right now because of FOMO. Fear of missing out. You can't be scared to miss out. I'm as calm as can be because I see other opportunities in the market. You can't gamble. If the market goes to my TP before I can enter, because right now I'm gonna tell you that I'm looking to enter right here. This is gonna be my entry, and I'm gonna ride that all the way. Boom. 1 to 3 risk reward ratio. All right, I said, you know, I'm going to stick to the midpoint of this fair value gap. That's going to be my TP. I can take all the way up to here and allow this to be my second TP. I can do that. I can have partials and close it once it gets up to here. Now, if it runs to this TP, right, for example, and I believe it's going to go up here. Now, there's a reason why I chose this TP because if I chose this TP, this is where I believe it'll stop at. This is my safe area. This is where I believe the market will go as highest in terms of its minimal potential. I'm not trading its highest potential. I'm not looking at this and saying that this is its highest potential. No, because then I'll be limiting myself. I'm looking at this and saying this is its minimal potential because it could possibly reach higher than that. So you can have multiple TP. This can be TP1, that can be TP2, and I have this level up here which can be TP3. You can play around with this. See right here, previous Friday high. If you believe it'll get to there, set your second TP. But however, I do believe you should take partials, your minimal trade expectation. TP1, which means take profit, by the way. TP1, TP2, TP3. Or you can stick in between the middle of these levels as well. Whatever you're comfortable with, but I'm being patient. I'm going to show you guys that right now, people will be freaking out. New traders will be freaking out, wanting to take this trade ASAP. I'm going to show you that it's going to run back to this level because it is. And I don't doubt in my mind for a second that it's not going to because I'm very confident. I don't gamble in trades. This is all strategy based, okay? I know the market's going to come back to this range. I know it. I'm very confident. So we'll wait. As you can see, we just tapped into the range that I said we would tap into. I told you that I know it'll go to that range right there. I told you that I knew it was going to do that. I'm not lying, y'all. I know what I'm talking about. But it can possibly come down to here, right? Because that's how liquidation works, just the way it is. We just closed below consequent encroachment of this fair value gap. Yeah, well, we closed on it. Now, if we close below, this is when I'll be concerned, right? and then we'll make a run back into this fair value gap and balance that back out. Closes out this position, which is likely it could happen. Then we'll wait for a better setup. But here we have these volume imbalances. So what I'm going to do is I'm going to drag down just to this fair value gap. We're already pretty good in terms of our position, so I wouldn't mind risking a bit more. So now we're at still a 1 to 3, which is pretty good. Can't complain about that. Good stop loss, okay? Market structure shifts pretty significant. We can see prices go lower. That's what this is telling me. If we respect this fair value gap, I'm gonna delete this to eliminate some confusion. This range here. This is going to be days after. Didn't really tune into it yesterday because I didn't really have time. So the market did exactly what I thought it was going to do. So in that daily volume imbalance range right here, looking at this, if I drop back to the 1 hour, or we can go to the 15 minute, you can see that we tap back into that daily volume imbalance right here. And after we tap back into that, I don't know if you can see up here, look up top of this. All these numbers are the prices. You have the open, you have the high, the low, and the close. So the O stands for open, the H stands for high, the L low, and the C stands for close, okay? If I hover over this candle right here, it's gonna give me all the information on the prices of the open, high, low, and close of the candle. If we look at the low, which is the wick right here, price of that is 44,423. If I go to this candle over here, 44,423, and the one right here, 44,423. All the same prices. Now, this creates equal lows inside the market. Now, this is very important because the market does tend to trace down into these ranges. So I don't doubt without a second that we could be looking for some sell opportunities all the way down to this range. Once we have taken liquidity up top, which is our major liquidity, I would be interested in seeing the market take out this major liquidity. The market does react to these areas, as you can see. What I would be looking at is a position like this. I mentioned that we would see positions. As you can see, I bought right here. Told you my positions that I have. The price is still going up. Now, these sellings right here says I sold. I wouldn't sell, me personally, based off my bias on this trade. I wouldn't have sold this trade until we reach previous Friday's high. Yesterday I told you I set separate positions on a separate screen, but if I do enter positions, it'll be on either funded, which I'm not giving any advice on funded accounts, or it will be on demo. I would never trade a live account. I would never show you that. And I would not recommend you to jump into a trade that I jumped into using the same amount of risk that I use. If I use a 100K demo, that don't mean that you go buy a 100K account and copy my trade. I do not whatsoever suggest anyone to copy anybody's trades. You should do so on your own terms, based off what you're comfortable with in your analysis. You don't need to be in a position where you blame somebody else for your loss. You can learn from people's winnings and losses, but I wouldn't recommend trying to copy people's trades because that results in you blaming other people, not taking any accountability whatsoever. And that's not going to help you grow. Yeah, copying trades, even if you were to turn out profitable, it does not benefit you in the long run. What if I just so happen to fall off the map tomorrow and I quit trading and you'll never hear from me ever again? And now you have to go chase a different guy with a different strategy and go copy their trades because you don't want to do it yourself. I mentioned how we took June 30th upper fair value gap limit. This was marked out on the weekly time frame. Used this volume imbalance as a way to deliver price higher. It could all be very simple, y'all. It could all be simple, but you know, I did tell you guys, and I did let you know on this order block that we will see price going up higher, and that's exactly what we saw here. We seen price deliver higher, and we respected the order block of these, down close candles. Risk management, trusting yourself, trusting your gut, trusting your skills. Make it pretty evident, all right, and study. Build confluences. Self-discipline yourself when it comes to risk management, and I can guarantee you that you will be a successful profitable trader. But you also have to trade like it's your job. A 12-hour shift every day from Sunday to Saturday. I will be expecting prices to make a run higher. Right now, we're in internal liquidity. Internal liquidity is just liquidity that's in a range of a high and a low. I believe we'll break out of internal liquidity once we liquidize this top here and then come right back down to these equal lows. That is the next ideal scenario that I am open that is possibly an A+ setup. Excited. It's been a long journey. Continue to grow and educate yourself, and you'll know as much as I do. And marketing these charts has become very easy. Y'all have a good one. Peace out. Stay true. Stay safe. Bless. All right, y'all. Welcome back. Trade hit. Okay, trade hit. I was very confident in this trade. I know I had mentioned how last time on my Instagram account that I would be charging y'all for this kind of stuff, like as far as my analysis and whatnot. Like, I'm not trying to just jump into making some money off of y'all. So in terms of just payment wise, I won't be charging y'all for any of the trade stuff, okay? Because I am not by all means a professional type of person when it comes to trading. I don't handle those situations because that comes with legal responsibility that I don't want. All right, so we're not finna jump into that. All right, so y'all are not gonna be paying me trades of itself and analysis, but y'all will be paying for the access for the Discord, okay? And that could be priced around, just depending on, like your skill level and whatnot. There will be different types of pages that you can join, groups that you can join in my Discord, depending on which one you want to access. Comes with a certain price, or we can give y'all a bundle as well on top of that. But I'm looking around 150 starting off. Now you may be asking, why choose me? Why choose me to pay for when it comes to this stuff? I think that you should choose me because I'm gonna be active on y'all. All right. Y'all can also contact me one-on-one. Y'all can have one-on-one conversations with me as well. So that comes with it. I won't be charging y'all extra for that. I have this trade that had hit. This is an hour time frame. I don't know if you can see that. I have to move around my. See at the top. This is an hour time frame up top right here. Hour time frame. All right. Now this is a big aggressive move. This is the Dow Jones US 30. I trade indices, so NASDAQ, US 30, and also S&P 500. I will not be trading no Forex, okay? I don't do Forex. I like to stick with my indices because Forex, for some reason, I don't get along with Forex, and Forex don't get along with me. I can apply these same strategies to Forex, but I haven't studied the Forex markets long enough to understand how the market moves. I'm sure I can get it. I understand the correlations and whatnot, but I do not fully like Forex unless I'm trading gold versus the US, and even then that's a commodity, so I like to stick within the commodity range and also indices. But I do have y'all a prize. I got y'all a present. All right, for those who want help with funded accounts, I did y'all a solid favor to show y'all how you can do this, okay? Right here. Boom. Wait. Boom. I started a 50K challenge for y'all. Now I'm gonna complete this 50K. For those who show me, the best person who shows me the best amount of consistency, that means that you gotta send me what you journaled. You gotta send me how much you locked in, notes that you took in on this type of stuff, what kind of education that you take upon yourself, how much did you invest into yourself, how much time. I will personally pass this account and I will give it to you. But you got to show me that you want this. When I give you this account, if you spell it, that's on you. All right, so I don't want you to come to me and ask me for another funded. Hey Ethan, can you pass me another funded account? I'm gonna tell you no, because you're supposed to apply what you've studied to this, and there's no reason why you should fail, especially after I've already passed it for you. What happens once you pass this funded account? Well, whatever funds that you make, the 90-10 profit split, so 90% of what you make will be yours. 10% will go to the company. This is a beautiful trade, excellent trade, spot on. Y'all know I didn't look at this from hindsight because it's in the video. Trade hit, and it hit exactly where I said it was gonna hit, and as soon as it hit it, it reversed. Alright, we tapped our TP, came back down, and now we're in this consolidation range, accumulating more orders. I do believe that we will come back up and look for, let's see, I do believe we'll come up and look for some more highs, but as of right now, we're in that range of where I had originally bought. All right, so we could be looking for some more highs up here. The market looks very choppy on this side. That's because I'm looking at the contracts. Delayed data. The reason why it's delayed on my end is I haven't bought the full. Thing. I'm going to, but I trade mainly on Trade Locker anyway, which comes with live data already. That's why it says delayed on my trading view. So, but I really do hope that you guys enjoyed this video. More videos to come, more trade videos. I'll be showing more of my positions and hell, even losses. There's nothing wrong with showing my losses. You gotta journal. You know, you take videos of your trading, you journal these things as you go, and that's what makes you better. So, video all your trades, write down all your trades, get you a personal trade journal. I'm sorry. See, when I made this 50K account, I'm gonna show y'all right now. Let's see. Don't mind my background, okay? I look crazy. My background look crazy. When I made this 50K account, all right. So as soon as I made it, I don't care how experienced I am. You gotta write down your plans, all right. So I'm gonna show y'all the plans that I've made personally with this. So as soon as I bought this 50K account, I made a 50K funded trade plan. All right. So this shows before your first payout, your main goals are to complete 10 profitable trades each, $250 profit. Avoid daily loss over 1,500, total loss over 2,500, floating loss 500 on any trade. Keep trader score under 20%. All right. I also talk about what mistakes you should also avoid. This is going to talk about as far as the profit and within those 10 days. By the end of this all, 2,700. That's what should be what I can withdraw by day 10. So this is a funded count of where I have got to have 10 profitable trades. I don't have to pass a second phase or a first phase or a second phase. Like, no, I gotta have 10 profitable days, not breach the account, and don't flow over 500 of loss. All right, want to start an episode of Road to completing my 50K funded account. That way I can show y'all it's very possible, and I'll even show y'all the withdrawal that I make from the account once I make it. It'll be in the bank account, so we can even do better than that. But hey, look, y'all, shout out to y'all. Thank y'all for watching the channel. Thank y'all for stopping by and looking at me and giving me y'all's focus and giving me y'all's time. I really do appreciate it. That being said, it's ICT Thomas, and y'all have a good one. I'm not too big on having friends. You emotional, just let a nigga in. She said she liked my other song, but really I was talking shit. She love it when I wear the watch that she got me, and I'm still gon' put it on, even though it don't match the fit. It was perfect timing, she came perfect timing. We in the hot tub with side of wine. Everything said was genuine, just tryna be a gentleman, cause I'm your guy. Gave you reasons not to trust, shut you out when I get drunk. Have you thinking I don't give a fuck?